Credit scores are a crucial factor in determining an individual's ability to obtain credit, such as loans, credit cards, or mortgages. A credit score is a numerical representation of a person's credit worthiness and financial stability. In this video, we will delve into the concept of credit scores, the types of credit scores, and how they affect an individual's financial health. Before we proceed, please hit the like button and subscribe to help grow our channel. Now, let's move on. What is a credit score? A credit score is a 3-digit number calculated using a mathematical algorithm based on an individual's credit history. Credit scores range from 300 to 850, with higher scores indicating better credit worthiness. The credit score reflects a person's payment history, outstanding debts, length of credit history, types of credit used, and new credit applications. Credit scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. A high credit score indicates that an individual is likely to repay their debts on time, while a low credit score indicates a higher risk of defaulting on payment. Types of credit scores. There are several types of credit scores, each with its own calculation method and scoring range. Here are some of the most common types of credit scores. 1. FICO score. The FICO score is the most widely used credit score in the United States. FICO stands for Fair Isaac Corporation, which developed the scoring system. FICO scores range from 300 to 850, with higher scores indicating better credit worthiness. FICO scores are calculated based on an individual's payment history, outstanding debt, length of credit history, types of credit used, and new credit applications. FICO scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. 2. Vantage score. The Vantage score is a credit score developed jointly by the three major credit reporting agencies, Equifax, Experian, and TransUnion. Vantage scores range from 300 to 850, with higher scores indicating better credit worthiness. Vantage scores are calculated based on an individual's payment history, outstanding debt, length of credit history, types of credit used, and new credit applications. Vantage scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. 3. Experian score. The Experian score is a credit score developed by Experian Credit Reporting Agency. Experian scores range from 360 to 840, with higher scores indicating better credit worthiness. Experian scores are calculated based on an individual's payment history, outstanding debt, length of credit history, types of credit used, and new credit applications. Experian scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. 4. Equifax score. The Equifax score is a credit score developed by the Equifax Credit Reporting Agency. Equifax scores range from 280 to 850, with higher scores indicating better credit worthiness. Equifax scores are calculated based on an individual's payment history, outstanding debt, length of credit history, types of credit used, and new credit applications. Equifax scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. 5. TransUnion score. The TransUnion score is a credit score developed by the TransUnion Credit Reporting Agency. TransUnion scores range from 300 to 850, with higher scores indicating better credit worthiness. TransUnion scores are calculated based on an individual's payment history, outstanding debt, length of credit history, types of credits used, and new credit applications. TransUnion scores are used by lenders, credit card companies, and other financial institutions to evaluate a borrower's credit risk. Now that we've covered the different types of credit scores, let's discuss the factors that can affect an individual's credit score. 1. Payment history. Payment history is the most significant factor that affects a credit score. Payment history refers to whether an individual has made payment on time, missed payment, or defaulted on payment. 2. Credit utilization. Credit utilization is the percentage of available credit that an individual is currently using. A high credit utilization rate can negatively impact on credit score. 3. Length of credit history. The length of credit history refers to the length of time an individual has held credit account. A longer credit history can positively impact a credit score. 4. Types of credit used. The types of credit used refer to the different types of credit accounts an individual has, such as credit cards, loans, mortgages. A diverse mix of credit accounts can positively impact a credit score. 5. New credit applications. New credit applications can negatively impact a credit score, as multiple credit applications within a short period can indicate a higher risk of defaulting on payment. Why credit scores matter. Credit scores play a vital role in an individual's financial health. A high credit score can result in lower interest rates, better loan terms, and higher credit limits. On the other hand, a low credit score can result in higher interest rates, worse loan term, and lower credit limit. A low credit score can also make it difficult to obtain credit, such as loans or credit cards. Improving credit scores. If an individual has a low credit score, there are several steps they can take to improve it. 1. Payment on time. Making payment on time is the most critical factor in improving a credit score. 2. Pay off outstanding debt. 3. Keep credit card balances low. 4. Maintain a diverse mix of credit accounts. 5. Avoid applying for multiple credit accounts within a short period. In conclusion, credit scores play a significant role in an individual's financial health. By taking steps to improve your credit score, you can improve your financial health and obtain better loan terms, lower interest rates, and higher credit limits. If you have any questions or comments, please leave them below. Don't forget to subscribe and turn on the notification for videos like this. Goodbye and stay stuck.